Hey guys, welcome back. This is another episode of Stock Market Review. Once again, this is Coach Lud here. Welcome back to LUWEP Trading. Before I get going, I need to remind you guys I am not a financial advisor. Everything I say is not any suggestions for you guys to buy, hold, or sell. And remember, it is risky to trade in the stock market, including loss of capital. So if you don't know, make sure you do your due diligence. And if you're not sure what you're doing, make sure to contact a financial advisor. But over here, what I do is try again to translate what I'm seeing in the chart to you guys, so you guys can try to apply that. And we don't deal with emotions. There's no fluff. There's no BS. It's straight charting and trying to see exactly what the market is trying to tell us. So from the get go, it was an interesting day, guys. It was an interesting day. Yesterday, I told you guys again yesterday, do not be surprised if we have a down day today. And why? How did I know we might have a red day today? Very simple. The VIX. The VIX tell us that. As I mentioned to you guys in the video yesterday, whenever the VIX popped above 10%, we have an 85% chance to have a reverse day, right? Whether it was up or down, we have an 85% probability of a reverse day. That's the way the VIX simply work. And what also accompanied that was the fact that we were also at resistance level. So that means everything aligned. And I keep telling you guys, the stock market typically choose the path of least resistance. It's very hard for it to break into support. So if there's no good news, there's no momentum that's really pushing it. We technically always take the easy way out. That's just the way the stock market works. So get used to it. So where does that leave us? Pretty much tomorrow with the data dump we are getting tomorrow. So volatility is back. Expect to have a very volatile, very interesting day tomorrow. So be careful. All right. He didn't go anywhere. And based on how the market closed today, once again, I'm expecting tomorrow to be one of those days where you have to be smart, you have to be patient, you have to follow the process. It is POP over here. You guys know what it is. Every day, all day and every day, it is POP. All right, you gotta follow the process. You have to respect the process, and this is how you guys going to make it further. Hey, what's up, Jeff? And if you guys are here, make sure to like the video for me. Make sure to share that video. Let me help me continue to grow the channel. We are nearly at 2,500 subscribers now. And I must announce that I'm seeing it while we are getting the views, but about 60 to 70% of you guys are not actually subscribed. So please do me a favor. That's all I'm asking. Subscribe, like the video. The algorithm loves that. They're going to push that out to more people, and we're gonna get right into it. So, soon as you look at the chart, what exactly you guys see? I'm not going to take that off because I think this is a reminder that all of us need. Today, I needed this reminder today. I have to be honest with you guys today. I made a mistake. Um, I did not follow my process and I paid for it. Not really a big cost, right? Very small loss, but it was a loss nonetheless. And that bothers me. But also, you know what? I'm human, right? We all human, so we all make mistakes sometimes. But this is why it's so very important. The one advantage that I did have when I violated those rules, my stop loss was so tight, it did not affect me very much. So that is the great thing that happened with me with that. All right. Again, remember to like the video if you are here watching. We're jumping straight into the S&P 500. Let's see exactly what we are doing with the S&P 500. Oh, as a matter of fact, one bit of news. One bit of news, guys. I think tomorrow might be just get ready. It might be bad. I'm hoping this is just expectation setting. So when the numbers come out, those guys can come out with pump arms and say, hip, hip, hooray, look how great we're doing. So I saw Peter Navarro. I don't even have to play the video. This man was doing an interview and he was talking about how Wall Street and everybody in the market needs to lower their expectations as far as how many jobs we are looking to be added every single month. And he said, and I quote, the days of seeing over 100,000 jobs added per month is no longer realistic. We should set our expectation more around the 20 to 30,000. Now, if that is all we added, that is abysmal. That's before the revision. Typically, revisions are typically lower, right? Especially with this administration, revisions are typically lower, and sometimes they are as much as 20, 30,000 lower. And I want to remind you guys, there was one of those FOMC meeting when John Paul was talking, and one of the things he mentioned, which it stuck with me. He said the Fed assumed the numbers being reported, that was dating back, what, 6 months, are actually 60,000 jobs lower per month than what the government is reporting. And the government has been reporting around 20,000, 30,000. So that means we've been losing jobs, right? If true, right? If true, that means we have been in a recession for about 2, 3 quarters already. I know recession is lagging, but they have not announced it yet. But that means we have been in a recession for quite some time. And what's scary about that is the crazy layoffs happening. We have credit card debt exploding, and we have a lot of companies announcing layoffs. So these are scary times. But this is why I'm here, guys. This is why I'm here. This is why I do this. So hopefully I can help you guys navigate the market. You can learn a little bit and learn how to trade and make some money on your own. Anyway, I just wanted to catch you guys up with this. Let's jump right back into the chart right now. What exactly are we seeing? I told you guys that yesterday, right? I put my money where my mouth is. I told you guys yesterday I bought puts. I had already told you guys that since yesterday. I bought puts, and that's what I did. Now, I haven't sold any. I'm still holding them. I haven't sold any yet. Why? Because we didn't get a big enough drop where I felt like I made enough profit for me to sell them or to just close those positions and open new ones. I didn't feel like that was needed right now because I think based on the way we are setting up, that's the daily, by the way. This is the daily time frame. We might come down all the way down to this level. All right. That's the way we're setting up right now. And if you look at it, remember that was since we were here. I told you guys I would not be surprised if we just stay within that wedge, do this before an actual move happen. It seems like that's what the market is trying to do right now. But every single time we got up to around this level, every single time, the momentum is just not there. You can see institutions coming in and just stomping this down. If you take a look at I don't know if you guys can see that properly, to see what the volume profile look like on the daily. You can see the volume was actually bigger than yesterday, even though yesterday we had a much bigger candle. That look at this candle right here. That was on low volume. So the market was running up on low volume, which means that was not institutional buying. That was mostly retail traders buying, right? So if you want to see when institutions are really getting in and stepping in and buying, you see that like that. Look at this volume profile. That's really staking up. This is where you would see that. All right. But anyway, let's jump into the lower time frame so we can see exactly how we're looking. As of right now, the MACD is saying, I have no momentum. I have no momentum. I have no win at my back right now. I don't know if I can continue to do this. So let's take a look at the 4 hours. This is currently our 4 hours. Again, I would say more likely than not, what we will do is come down to this level and maybe bounce, right? So that's what we might do. But I don't like the fact that the MACD. If you look at the MACD, right? The MACD looks like something that's about to do this, back into negative territory. That to me is not very good news, all right? Because you can see that we're making lower high, lower high, lower high. That would be triple bearish divergence. We do not need triple bearish divergence, all right? We do not need that right now. But if you're looking at where the stock market is right now, You can see it. Every single time we get here, look at the 2 hour time, the 2 hour time frames. Excuse me, that's the 4 hours. Look at those. Every time we come here, look at that big drop. Same thing here, big drop, right? Every single time we having big drops. And once again, what are we doing here? Again, you can see that there is no momentum to push up. We are fading. We are fading. You can see it. It is clear as day. We are fading. Now we'll see how that goes. Let's dig in a little lower. Now let's go in the 2 hours. What exactly is the 2 hour time frame looking like? I'm not going to call this a bull flag. And for those of you guys who are technical traders, you should know exactly why I'm not calling this a bull flag, right? This is not a bull flag because we don't have a support zone, right? Had it just stayed right around this level, had we just stayed right around this level, I would have said that that would constitute some sort of bull flag. But as of right now, I do not see that right now. All right. Um, this is the 2 hours, not looking good. Best case scenario for us again is a curl down and a curl right back up, so we can make a what? A bullish divergence, so we can have that push, that bit of momentum that we need. But that will have to come with some good news tomorrow. Now, what exactly is good news tomorrow? Remember, there was a time in the market when bad news was good news and good news was good news. So, and we also went through a period in the market where bad news was good news for the market and good news was bad news. Meaning due to what this was the time when the job numbers come out and it was bad. So that means okay, the job numbers are bad, so therefore good for the market because you're going to cut interest rate, so the market will rally up. So if we have a dismal and abysmal job number tomorrow, does that mean we push up? I don't know, guys. I really don't know because we're in a situation where the job market is shaky, the dollar is shaky, and we also have a housing crisis that's happening in real time. We have a credit card debt crisis happening in real time, and the job market is also shaky, right? And inflation is going up. So we have a lot of headwinds that we have to actually take. So that's I don't know if bad news for the job market tomorrow means we have a higher probability of getting a tax cut. That's how that would typically work. So let's see exactly what we are looking at in the 30 minutes. All right, the 30 minutes typically leads us, and right now, I do not like what I'm seeing, guys. I do not like what I'm seeing because it seems more like we did an inverted head and shoulder pattern right down here, and then we pushed up and got to the top. What do you guys see every single time we got to the top? We have absolutely no momentum, and then we completely push back down. All right, every single time. It's no different than what happened here, what happened here, and now what's happening here. And as you guys can see, all we are doing is making lower lows, right? We're just consolidating and making a leg down. It's like we are stair stepping down right now, right? So let me see if I want to draw this. You see, we do this, we drop, boom, that drop. So maybe we'll do this again and continue doing that until we get here. I don't know, but as of right now, this is the pattern that's sort of like showing up right now. That's the pattern that's showing up right now, and I do not like it. And look at that. This is printing straight down. Now, if we don't get that bounce that we're looking for, this might be very painful tomorrow for some people. This might be especially if you don't have any protection, right? I do have a question here. Expectations on CRML. I'll address CRML in a little bit. What I'm looking at here, and that is really the problem of what I'm looking at here. All right, so that's the SPX. Since most of you guys trade the SPY, I'm going to go on the SPY. This is still the S&P 500. but I'm going to show you guys exactly what happened in the SPY. I've talked to you guys. I draw these lines as recently as yesterday. Once again, we went over it. All we did again was go to the all-time high resistance level, right? That is the resistance level or zone. If you want, if you're somebody who trade with zone, that is the resistance level as far as zone, right there. So that is the problem. All right. What is the path of least resistance? The path of least resistance seems more like a move down. So this is what I'm looking at. I mean, it's the same as the SPX. I don't have to fully go over it, but as of right now, what we're looking at, what we can hope for is this complete some sort of inverted head and shoulder pattern. So that's a shoulder being completed here. This is this shoulder, and you expect that move. Unfortunately, as I always tell you guys every single time, I do not like when those patterns are being formed at all-time high or resistance levels, because all patterns are not the same depending on where they are created. A an inverted head and shoulder pattern or any bullish pattern formed at support level has a higher probability of working out, of playing out, as opposed to something like that being formed at resistance levels. All right. So that's what we are looking at. All right. We got Warden from Georgia. Hey, what's up, man? Appreciate the love. Um, let's see. Let's cover the cues. I'm going to cover the cues. The cues actually, even though it dropped, it did not do too bad, and I'm going to give you guys both cases. All right. So if you have QQQ calls, this is your bull case. You need this to continue pushing up. All right, and possibly do that. This is your best case, which means what's developing on the chart right now, what's developing on the chart right now would have to end up being a head and shoulder pattern, an inverted head and shoulder pattern, so we can continue making the move. So this is what we would need. Unfortunately, unfortunately, this is what I'm worried about. Let me show you guys that. Excuse me. This is what I'm worried about. So with the SPY, we're still in the wedge, right? The SPY came back here, we're in the wedge. Unfortunately, with the Qs, we have broken out of the wedge pattern, right? So broken out of that trend line, upward trend line, and we have retraced back to the scene of the crime. That's a retest. All right. These are big crash signals. All right. I'm not even talking about retracement. These are typical crash signals. Not even retracement, crash signals. All right. That's the problem I have with that. Things like that happens in forms all the time. That's the one. That's number one. Second thing, look at where this closed. It actually closed below the structure, right? At least this time, like I was telling you guys yesterday, at least we closed above. All right. I was like, hey, you know what? At least we closed above. So when you look at that, it's not as bad. This actually perfect case in rejection and whatever. And what are we looking at? This actually closed below the support zone. So that means now it's facing resistance. So let's see what we're doing. Hopefully, we can sort all this out doing pre-market and overnight trading. All of that can get sorted out. And if that happens, we might be okay. Other than that, this is the 2 hour time frame. Other than that, this is what we're looking at. A potential drop. That's what we're looking at. If we cannot hold these levels. All right? Because remember, the shoulders come all the way down to 603. That's a big range. That is a big, it's not a big percentage, but that's a big range. Now, if I check the 30 minutes seems more to be doing what? For those of you guys who know this pattern, this seems to be doing more like a bear flag, right? And If I take my Fibonacci retracement and I put this here, so for this move to cancel out, we actually have to go above 614 tomorrow. As long as we are below 614 tomorrow, as long as we are below that, we still have, I would say, about a 60% probability of having a down day tomorrow, as long as we cannot have a candle that close above this level. All right, so that's what we are currently facing right now. So again, tomorrow, guys, I need you guys to be patient. I need you guys to make sure you do what you do, and do it well. I'm going to go and look at the S&P futures right now, just to see what's going on. Right now, if I check the daily, that has a lot of drawing on it, guys, because I do trade the ES, so there's a lot of drawing on that. You can barely see anything. There's not much going on really, so I'm going to let that be. I want to double check the VIX just to see how we shaping up on the VIX. Not good. Not good. Remember yesterday, guys, I went over that wedge pattern that I drew with you guys, right? What did I say? Typically falling wedge breaks to the upside, right? Look at what this just did. Broke out, came back for a retest, and seems like we're pulling up. This is exactly what I did not want to see. What I wanted to see was a rejection right on this line. I wanted to see a rejection back to this level. All right, but when we have that, and again, look at the MACD, what the MACD is doing. This is the 30 minutes in the MACD. This is about to turn positive. So that means, hey, there's cautions. Be cautious. All right, you guys have to be cautious. You guys have to be very, very careful. Okay, let's go in the 2 hour time frame. The 2 hour is actually looking to actually that just cross. All right, looks like he's doing a bit of a golden cross right on the MACD. These are all things that we did not want to see. The 4 hours, same thing. We out. This is what it's looking like right now. This is not good news. All right. Let me take a quick look at the 10-year yield. This is somewhat of a good news. The 10-year yield is dropping. All right. This is dropping, so that means the dollar's getting a little stronger. And the long dated interest rate is actually falling off a little bit, so that's good. All right, that is actual good news. All right, so as far as for the review for these things, I'm going to leave that there. Someone had asked about CRML. Let me take a quick look. Man, CRML is in trouble. CRML is in trouble. For those of you guys, I think I did mention that at one point that was one of my chosen trades, right? I had someone that I pretty much got out of all of it. I kept one, and since that rejection, we can never get back to the levels. We just can't do it. I checked to see if there was any sort of news that came out or anything like that. There's nothing that came out except the fact that the market was going down, and this whole sector just took a whole bath and just went down. Now, if I want to look at it on the right now, I'm gonna remove everything just to see it. Just remove everything here. I'm looking at that going way, way back. I'm not really seeing anything. So it seems like okay, we did a double bottom, and that pretty much that double bottom has been completed, and we are back right there using the neckline as support level. But we are printing down. We don't have anything as of right now. It's not clear what's going to happen with that. Um, not I don't see anything with that, to be honest. That was a fast drop. That came fast. It happens. The good news and the good things, the fact that I was able to, and that's one of those trades I also give to the community. I called to take some profit on it, and whatever. So hopefully people did take some profit. But if you held anything right now, you in trouble with that. All right. What else do I want to take a quick look at here? Bitcoin. It's been a while since I look at Bitcoin. Let's see what we are doing with our good friend Bitcoin. I know Bitcoin is struggling. Bitcoin is struggling very, very hard. This is the weekly. The good thing we could say, hey, we have a long tail right there. Remember, I told you guys we had some minor support like around this level here. Right there, you can see it. So that's pretty much where we came, right there on Bitcoin. But this is where the major support line is actually sitting. It's a little below this level. So what are we going to do? I don't know. Even if I go out 1 month, it does not look good. As of right now, this does not look good. But we are at major support level. All right, because you could see this was a rejection level where when it made a double top, right? This was right there, and then now you can see now it's being used as support. Let me just draw that there so I can have that just completely stay there. There you go. There you go. That's it. Cool. Okay. Perfect. You guys can see that. You guys can see that. That is it. And that's the monthly chart. Excuse me. If I look at the daily, if we go on the daily, I have to zoom in so we can see that, see what the daily is actually doing here. Again, since we dropped, it seems like we just have this little pocket right there. We're consolidating. We had that big drop, a big push up, and we've been on. Now we use it. This is being used as resistance. That support zone now being used as resistance, and we just pretty much staying right there. There's nothing being done that's giving any indication on what exactly is going to happen. We just don't know. All right, and let me see how far did we get back on that move. It's literally at right around that 51, 61% Fibonacci retracement. So that means as of right now, we still have a bear flag in play. All right, still a bear flag in play. Um, take a quick look at Ether. Uh, Ether just looks awful. Sort of doing the same as Bitcoin, came down. This is again the support level that I had. You guys can see it, man. Like all the support levels that we had, we all coming, everything coming down to those support levels, and they actually losing those levels. So, and the most egregious thing is I'm not seeing any relief patterns. All right, so that's the problem. I'm not seeing any relief patterns. Now let's take a quick look at gold. I want to take a quick look at gold because right now I'm trying to figure out exactly where the money's going from, what the money's going to, because it's almost like there's a soft rotation that's happening, but it's not clear. All right, it's a soft rotation, but it's not clear. At some point, it was clear, like okay, the rotation is being done into gold. You can see it, and it was running. Then it was healthcare. Then it was utilities. Then consumer staples. But now it seems unclear. There's just certain stocks in certain sector. It's not one sector that's actually making a move. Let me take a quick look at the. This is the biotech sector, LABU. There's nothing going on here. If I take a quick look at the Mag 7 is not doing anything. It's at support level right now, already broke out of the wedge. It's at a support level. Is it going to break down? Is it going to get a bounce? I don't know. But as of right now, it's not looking good. By the way, once again, guys, I have to keep reminding you guys, if you are here, please make sure to like the video for me. I would really appreciate that. If you have any questions, drop them in the chat. Any questions you have, drop them in the chat. I would love to get to. I like answering questions. So if you have anything, drop it in the chat. If I don't have a chance to get to any of your questions, so I'll get it to them in the next live. You guys know almost every single night we are here from Sunday to Thursday. We're not here on Friday and Saturday using those as family night. All right. Let's see what else can I cover for you guys before I wrap up here because I have to go meet with those guys here, in the community. Once again, I am looking. This is one free thing I'm going to give you guys. This is my best. I'm not going to do a full analysis on that one, but I'm just going to show you guys at this level. I am buying Netflix at this level. Why am I buying Netflix at this level? Again, I'm not telling you to buy. I'm not saying you should definitely do so or anything like that. I'm just letting you guys know this is what Coach Lord is doing. I am buying. So I started getting in, and if we do break down and come to this level, like right around 70, I will be buying again. And when I say I'm buying, I'm not buying. I'm not buying for the next week or for 2 weeks out. I'm buying for like a year from now. All right, this is what I'm doing. Why? This is the same thing that happens right there. Right? You guys can see that push. We had this push, 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 and then we got to that 2022 bear market. We retrace all the way down, and what else are we doing again? You know, like they say, man, the market does not repeat itself, but the market does like to rhyme. To rhyme. Let's take. Hold on, hold on, hold on. What exactly do you guys see here again? Typical thing where we are getting a push, 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 and now we are dropping once again. Let's see if I can take a look at that. Doing this drop was how much? Let's see. This drop was, oh my goodness, that was actually 75%. That drop was 75%, but then Netflix is a lot bigger now, and this current drop is around 40%. All right. If you need money, if I need money next week, I would not be getting into this. If I am going to I'm going to need the money to do things to pay my bills next month, I wouldn't or 2 months from now, I would not be getting into that. What I'm going to put in, it's like that to me it's almost that's like investing really. That's like a core position. When you're doing leap like a year or two out, that's a core position. That's almost like owning the actual stock. You're an investor at that point. That's not trading, that's investing. All right. So don't expect, hey, tomorrow we're gonna have this crazy bounce and I'm about to make all this money, yada yada yada. So don't expect that. So this is one I'm looking at. And my next play, actually I have two more plays right now my best one, and I have to be honest. I have to let you guys know. I have to be honest on that. I've already been on this since way down there, and whatever. We actually getting a breakout, and if you look at this in the weekly, this is a weekly breakout that's happening with this. That's Pfizer. Anybody that's paying attention, that's Pfizer. This is a weekly breakout that's happening right at this level. Um, I said two. I don't know why do I keep giving you guys so much. I said two. All right, and the next one that I'm paying attention to, just paying attention to that, is T-Mobile. This is T-Mobile, inverted head and shoulder pattern, completely beat up. They actually, that's the thing. Scary part is they report tomorrow. That's the scary part. So if you don't have the heart, um, or you're not willing to take on that kind of risk, don't do it. Don't do it. Don't touch it. Just stay away. Let the dust settle. You can decide what to do next. I personally feel comfortable doing something there, so that's why I'm doing it. All right. That being said, guys, I gotta go. Thanks for tuning in. It's been a pleasure. I love being here and going over the charts with you guys. I have to go. I have to go. Once again, make sure to like, subscribe. If you like this video, make sure to check out my other ones. If you don't know how to trade yet, just a reminder that I do give out a trading course. So feel free to reach out to me so we can talk about how we can get you started. And also, I do have. If you already know how to trade, you know technical analysis, but you just need that extra little edge. Check out my other videos as far as the trading videos, trading strategies. There's a playlist. I actually do have a playlist that calls trading strategies or something like that. Just check that out. You will see specific strategies that I use, whether it's the orb, whether it's the fair value gap, things like that. Just make sure to check those, and those have example trades on them, and you'll see how I execute things. I teach you how to avoid breakouts, how to spot them, the whole thing. Anyway, thank you guys. I appreciate you. I will see you guys tomorrow. Take care. Have a good night. And go out there tomorrow. Be patient and make some money. I'll see you guys tomorrow.